Have you ever thought about what the most important factor that determines asset prices is? That's it. The force that controls and runs financial markets is called supply and demand. Supply and demand are highly interdependent and shape the relationship between buyers and sellers. But first, let's answer the question of what each of them means. Supply is the total amount of goods and services that sellers, producers, and suppliers are willing to sell and offer in a particular market. Demand is the total amount of goods and services that consumers are willing to buy. Demand indirectly shows us what consumers prefer, how much their income is, and how much they truly value goods and services. But each of these also has its own law. The law of supply says that when the price of a good or service increases, suppliers are more willing to produce and sell more, because obviously they make more profit. On the other hand, the law of demand says that as the price of goods or services goes up, consumer demand decreases. So whenever the balance between supply and demand is disrupted, the market equilibrium is thrown off and prices can experience a lot of ups and downs. But how exactly do supply and demand drive up market prices? The financial market is a place where many traders are both buyers and sellers. If someone predicts that the price of an asset will go up, they take on the role of a buyer. And if a trader feels that the price of an asset will go down, they take on the role of a seller. When it comes to trading financial assets, support and resistance levels, as well as supply and demand zones, are concepts that are widely used in technical analysis. Support levels usually form when there is an imbalance between supply and demand is stronger at these price levels, which indicates an advantage for buyers. On the other hand, at resistance levels, supply is so strong that it likely prevents the price from rising further. This video is just the beginning of learning how to identify these points. In the next videos, we'll focus more on trading strategies, so we can better understand the importance of these levels.